So picture this, it's 2025, and one AI stock just shoots up over 300% and then crashes. At the same time, its biggest partner is posting these steady, powerful gains. What in the world happened? Well, we're going to break down that exact story, the story of Nvidia and CoreWeave, to pull out some crucial lessons for anyone investing in the future of tech. This isn't just about the numbers, it's really a blueprint for navigating the whole AI boom.
Yeah, there's just no other way to put it, right? We are in a full-blown AI gold rush. Every headline is screaming about the next big thing, and that pressure to jump in, it's intense. But with all that excitement, you get this flood of noise and hype, and it makes it incredibly difficult to tell if you're investing in a future giant or just the latest bubble. Which, brings us to the big question. How do you actually invest in this incredible tech revolution without just getting swept up in the hype? How do you make your decisions based on something solid, not just whatever headline is flashing across your screen? That's exactly what we're going to get into. And to figure this out, we're not going to talk in hypotheticals. No. We're going to dig into a real, concrete case study from 2025. The super deep, multi-layered relationship between the chip titan, Nvidia, and the AI cloud provider, CoreWeave. I'm telling you, this story has it all. Massive growth, crazy volatility, and some incredibly clear takeaways.
Okay, so what is the deal between these two companies? Well, it goes way beyond a simple you buy, I sell kind of thing. Nvidia isn't just selling chips to CoreWeave. They are fundamentally invested in their success. They're playing a dual role, as both a critical supplier and a major stakeholder.
All right, before we dive deeper, let's get on the same page with a key term here: supplier exposure. Just think of it like this. During a gold rush, you can bet on a single gold miner finding gold, or you can invest in the company that sells the picks and shovels to all the miners. It's a way to get a piece of a hot trend, but with a potentially very different risk profile.
And Nvidia is the perfect example of this in action. First, they're the primary supplier of the most important shovels in the AI gold rush, those GPUs. And second, because they got in on early funding rounds, Nvidia became a multi-billion-dollar owner of CoreWeave stock. So think about it, when CoreWeave wins big, Nvidia wins twice. Once from selling all that hardware, and again from their ownership stake going up.
Okay, so let's get to the good stuff. Let's look at the numbers from 2025 and see how this whole thing actually played out. Because the performance of these two companies shows two dramatically different paths for an investor. One was defined by just breathtaking volatility, and the other by steady, solid growth. So first up, CoreWeave. Man, what a ride. This was a classic high-growth tech story. The company goes public in March at $40 a share, and then, fueled by all the hype and some massive contract news, the stock went on an absolute tear through the middle of the year. But then, reality started to set in. The market began looking at the real costs of that growth, and the stock pulled back hard, settling around $67 by mid-December. For investors, it was a total roller coaster. And let's be real about just how high that peak was. A staggering 367% gain. I mean, if you bought at the IPO, you saw your money multiply. This is the kind of explosive return that fuels market mania. It's what makes headlines, dominates conversations, and gives everyone that feeling that they're missing out if they're not on board. But what goes up, right? From that insane peak, the stock just plummeted 64%. For anyone who bought near the top, that is a devastating correction. This is the brutal reality of a hyper-growth stock. The rocket ride up feels incredible, but the fallback down can be just as fast and way more painful. So, okay, after all that chaos, the rocket ship up, the painful crash down, where did the people who got in at the very beginning actually end up? Well, by the end of the year, they were still up about 68%. Now, that's a fantastic return by any standard, but it came with a huge amount of stress and volatility. It was anything but a smooth ride.
All right, now let's put them on the same chart. This is where it gets really interesting. CoreWeave's 68% return for those IPO investors looks great, but look at the ride it took to get there. Now compare that to Nvidia, the supplier. It returned a very, very strong 31.3%. It wasn't that crazy headline-grabbing peak like CoreWeave, but it was a steady, powerful gain that was driven by demand from the entire AI ecosystem. The takeaway here is pretty clear. CoreWeave offered a higher potential return, but Nvidia offered a much smoother, less stressful path to a fantastic return.
So what's the takeaway from all this? I mean, watching this whole story unfold in 2025 gives us a fantastic roadmap for thinking about AI investing as we head into 2026. This case study really gives us 4 clear, actionable lessons for any investor trying to figure this space out.
First up, supplier exposure, like with Nvidia, can give you a much smoother ride by letting you bet on the whole industry, not just one player. Lesson number 2, you've got to track the real contracts, not just the headlines. The gap between CoreWeave's soaring stock price and how fast they were actually building things out, that was a key signal. Third, diversification is your best friend. Nvidia did so well because its chips were in demand everywhere, which protected it from the fate of any single customer. And finally, and this one's huge, be patient. Use the tools that are out there to follow official company filings and build your case on facts, not the fear of missing out.
When you boil it all down, it really comes back to one simple, powerful idea: data over hype. Your edge as an investor isn't about trying to chase the hottest stock. It's about having a clear, data-driven process that helps you cut through all the noise and make smart decisions. Look, everything we've talked about today, it's not just my opinion. It's not guesswork. It was all built using publicly available tools: official company filings, SEC reports, earnings calls, and financial data from places like Bloomberg and Yahoo Finance. These are the exact same tools that you can use to track the real story, not just the market chatter. And really, that's the bottom line. The story of Nvidia and CoreWeave in 2025 is just a masterclass in why grounding your investment strategy in verified data is so critical. It lets you see the whole picture: the upside, the risk, the volatility, and the underlying stability, so you can make the choices that are actually right for you.
So as we look to the future, the question isn't just what's the next hot AI stock. The better question is this: the next boom is absolutely coming. The next wave of infrastructure is being built as we speak. So the real question for you is, which contracts, which supply deals, and which official filings will you be following?